Hey traders, Jonathan here at forexschoolonline.com. I've put the video on because I'm looking to enter a short trade on the Australian dollar New Zealand dollar daily chart. The setup I'm looking to enter is a pin bar, a large pin bar. This pin bar here that I'm referring to. This market's been in a nice downtrend for both the longer term and the short term. We can see on this daily chart here that price was in a really steep downtrend without many pullbacks. We had this pullback into resistance here, but other than that, in recent times, price over the last not quite 4 months, price has just been shedding pips, and that down moves about 1,000 pips with not much pullback at all. Over the last couple of weeks, price has found a low, and it started to return. So price did move lower. It started to form a base, and as I've discussed in a few of the videos and a few of the charts in focus section, when price starts to return or starts to change direction, it instead of price when it looks to turn around, it won't often just turn straight like that. It will often do what we see here. So price has found this low. It will often consolidate for a little while and then turn around, and that's what we've seen here. We can see that price found this low and then it consolidated, made a small false break of this area. That was price having one last crack at trying to break lower and continuing the trend, and then price returned, and it's now having a crack at moving higher, and it's having one last attempt at moving higher to continue with this new uptrend, which still may yet continue. If price can break this resistance area and complete this breakout, we may yet see a new uptrend form and a new breakout. What I'm looking for to happen though is I'm looking for this pin bar to break and for price to continue with this recent down momentum, for price to break away back down into these recent lows. The reason I'm liking this resistance area so much is because not only have we got this recent down momentum and we've got this this super key resistance area, but this area is also a longer term price flip weekly resistance area. If I zoom back out to the weekly chart, we can see that if I leave that level there and I pull the chart along, we can see that price has reacted. This is the weekly chart. We can see that back into the past, this is 2008, price has acted as support. Price has acted as support again. This is 2007, support again. Price made a false break of this support line back in 2006. Now we have all these little price flip areas. So price couldn't close above. This is going back in 2005. We had more resistance. All these price flip areas I talk about in the article over at the website. We had the price flip areas here. We had more support here and more resistance. So this area has been a proven price flip support and resistance area going back in a long time. That's going right back into 2000. That's going right back into 2004 and 2003. So this area that I'm looking to take a short trade from on the daily area has been both a long-term weekly price flip support and resistance area, and now price is reacting on the daily area as well. When we talk about pin bars a lot in our videos, and when I talk about them in the article, I've got a good article that talks about where traders go wrong with the pin bars. This is a great example of how pin bars should look to form. If I zoom in on this chart, you'll notice that the reason this is a good quality pin bar is because we have this resistance area first formed, and this pin bar is sticking it's up at the high. Okay, so first we have a swing high. Price is up at a swing high for the bearish pin bar. So for a bearish pin bar, we need the pin bar to be up at a high. And if we're looking to take a bullish pin bar, we need the bullish pin bar to be down at the low. And you'll notice that it's sticking well away from all other price. And by what I mean by that is this nose is sticking well away and from all other price, and it's sticking through the resistance, and it's a well away from all other price. Quite a lot of the pin bars I see traders play, this pin bar, instead of sticking well away, the pin bar will be stuck back in here, and it'll be looking like this. So you'll have the nose back in here, and the nose won't, it'll just be going past this previous candle, or it'll be almost an inside bar. The price won't be sticking well up and away from the previous candles, or it will be just touching the resistance. You'll notice this is a great example because it's well up and away, and this long nose is protruding away, and it sticks out from all other price. We often talk about the when you turn on a chart, that when we turn on a chart, you want the obvious pin bars to just stick out. And you'll notice this one, this pin bar, it just sticks out because it's there by itself, and it's sticking well away from all other price. I'm going to leave this first half of the video there. I'll come back in a few days time and I'll recap this video. Hey guys, Jonathan here again to recap the second part of this high probability pin bar. The plan was to come back in 3 or 4 days time to recap the second part of this video, but this pin bar has taken over 2 weeks to work out now and end up falling lower to come off for those traders who entered this pin bar. This has ended up being a very good lesson for those traders that have ended up entering this pin bar, and a very good test of patience. I've received a lot of emails and a lot of correspondence over the last 2 weeks, and a lot of different questions. But most of the questions have been around the same sort of thing, and it's all about how do we stay in this trade? Do we stay in this trade? Do we cut the trade? And along those sort of lines. And the simple answer is, you've got to have faith in the trade. You've just got to manage your trade. You've got to make a pre-trade plan, and then you've just got to let the market do its thing. Your trading edge is not built over one trade. You've got to make your plan before you enter your trade. Then just let the market do its thing. You can't become obsessed over one trade. You've just got to let it do its thing and then switch off. You go and do other things, look for other trades, turn that trade off, and then let it do its thing. You put your stops in the market, you put your targets in the market, and then move away. When you become obsessed, you're on your phone, you're looking at every pip movement, you're going to start micromanaging and overmanaging the trade, and you're going to start making terrible decisions because your mind's going to become obsessed. You just got to let it go. If you're looking at every pip movement and you're in this daily trade and you're looking at that for 2 weeks, you're just going to get so stressed out. You got to let price do its thing and just let it roll. Let price do its thing. To quickly recap this trade, we had this lovely downtrend. This downtrend goes a lot longer. If I zoom the chart out, it goes back for quite a while. But this short-term downtrend that we were looking at is the recent 4 months. We had this nice solid false break pin bar that was making a solid false break of this recent key resistance. Now, price did make a move lower, but it found this really close near-term support. Now, what I want to bring traders' attention to is something I talk about in the trade setups over at Forex School Online. It's about when price winds up. Price often winds up just before a large breakout, and the tighter price winds up, you'll find the stronger the breakout. Okay, you'll notice here that we had this candle here, and then price starts to wind up. and it gets tighter and tighter. Okay, so price starts to wind up tighter and tighter. These wind ups are like a spring. Okay, so you'll often see like a large candle, then you'll see a smaller candle, smaller candle, smaller candle, smaller candle, till eventually it has to break, and it'll break either way. You'll often then see a large breakout, and then you'll see like so, and that's what we have here. Okay, so we have this wind up, wind up. Now the reason it's handy to know this is because you can often use this information when you're trading. You can often look for these wind up where price is winding up, and then you can see that we have this breakout. You'll see these all over your charts, and you can often use these to shorten your stops, to move to break even, etc. Now, if you're looking at this chart, if I zoom back out, if you're in this trade, you'd be looking at this wind up, and you'd be pretty confident knowing that you were going to hold this trade and just keep holding, knowing that price is winding up, you've still got this pin bar, and price is getting ready for a break. You've still got this pin bar on your side. The recent downtrend is down. You'd still be holding. You wouldn't be cutting your trade yet, because you know price is getting ready to break. Okay, you know, yes, price could break higher. However, this you've noticed from the price action that this previous resistance has held. Okay, so at this level is held. Price has moved higher, it's still holding, and after that this wind up is now occurring. So if you were still in this trade, you'd be holding and you'd be waiting. Okay, so I just wanted to bring traders' attention to that you can learn from the price action. You've got to look. We're not just price action traders, aren't just pattern traders. They're not just looking at a pattern and then setting entries. You can look at the price action and learn from the price action what price is looking to do. I really hope you've enjoyed this price action video. If you want to learn anything more about price action at all, just jump over to forexschoolonline.com. I look forward to talking to you in the next video soon.